I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show we have Sebastian Ganjali, the head of strategy at Kryll. Sebastian, welcome to the show, and thanks for taking the time.
Thanks for having me, Ashton. Pleasure to be here.
You're very welcome. Let's dive into the future of trading, decentralized hedge funds, learning from others, and not investing in these traditional hedge funds and crypto hedge funds. I feel like everything's sort of twisting with the technology that we have with Web3 and making it easier, better, faster for people to invest and potentially safer as well. So let's just kick off the conversation with hearing a little bit about the team solutions from Kryll, and then we'll dive into everything trading.
Yeah, absolutely. So with traditional finance, the hedge funds, they currently control, well, assets under management can be at around $5 trillion, which is a monumental amount of money that is currently being managed by these hedge funds. So it's a huge industry. And one of the things that's happening now is, traditional hedge funds, they don't really understand, or they do understand because they use automated trading and algorithms themselves, but they kind of snub their nose at the automated trading scene in the crypto space. And this is where a lot of the innovation is actually happening. And traditional hedge funds, when they want to, deploy automated trading algorithms, they actually have a team, let's say, of mathematicians, statisticians, and computer programmers to test and build these. So when Credit Suisse and Deutsche Bank, they want to do, they can throw billions of dollars at this industry to develop this. And trading algorithms, they do about 70% of the trading in equities, which is huge. And right now with Kryll, what we've developed is something where an average Joe can basically go. He doesn't need to be a mathematician. He doesn't need to be a statistician. He doesn't need to be a programmer either. He can actually build his own strategy and test it. And it's really disrupting, the space little by little, but it's going to be huge in the future. And I just communicated to the managers, hedge fund managers, like, you can't really snub your nose at this. This is going to happen. You can't argue it away. And it brings me back to the days of Blockbuster when, they offered, Netflix had asked for $50 million and Blockbuster said no. People will always want to come in store to rent their movies, and look how that ended up. So we're going to see something similar to happen to the hedge fund industry, and it's going to be a big change, I believe. We know that it's already adding value to the markets, and a lot of traders are going passive with their trading algorithms.
Great intro, Sebastian. And yeah, I feel like there's definitely a necessity to upgrade the way that hedge funds work right now, where you send them money and you're getting a report, and it's not the easiest to just pull your funds out. I feel like there could be a lot of improvements in sort of the future of hedge funds in the decentralized world. Maybe you can talk about the process for, how is it easier and better in Web3 to invest in a decentralized hedge fund?
Yeah, so you think about what processes you have to go through to go and put your money into a hedge fund, or even pull your money out of a hedge fund. It can take sometimes months, and the profits that they take if you did make profits by being in that hedge fund can be upwards of 30 or 40% of your profits. So that's a huge haircut you're taking. With trading strategies or robo advising, you don't have those huge costs usually, and if you do, then people go somewhere else and use a different trading algorithm or robo advisor, and that's what generally happens. And you don't have to wait for months to pull out your funds and fill out a reason why. It can take less than a day. So that's definitely, where there's inefficiency, there's going to be a disruption in that inefficiency when there's some innovation, and that's what's happening now.
Yeah, I like one day compared to months, definitely. And especially, I feel like the walled gardens that they've created in traditional hedge funds people don't understand that, if they're taking 30 to 40% of the profit, normally they mention, no, it's only 1%, 2% fee for the management. Never mind the money that they made for you. They take a lot of it. And using like a sort of decentralized Web3 version, you could potentially make more, and definitely on the management fee profit side, you're going to keep more of your own money and hopefully be able to withdraw it at any time, depending on what kind of fund you're investing into. Now, what I'm curious about in the differences of the sort of the fund managers, with hedge funds, they built up all these qualifications, and they have this big business, and that we're qualified to manage the money. How does it work in more of a decentralized way on how they determine who can create a strategy or a fund for others to invest into?
Yeah, so trading strategies with Kryll, for example, they go through a verification process. They're back tested, and you can see the back test results. You can even go and back test that system or strategy on other pairs that you might be interested in. So you can have a good idea of what the max drawdown is on a particular trading algorithm and how it would benefit you, or what the horizon is. So if it's an aggressive one, does it perform well in a bear market? Does it perform better in a bull market? So this is definitely, it makes it easier, but while traders, I know that it's a bit cliche, but a lot of crypto traders, they're not very trading educated in a lot of ways, and they don't understand the importance of profit ratios, Sharpe ratios, and max drawdowns. But when you use something like this, you're getting that information and it's being communicated to you, so you get a better idea. The trader is getting more educated, the retail trader, and that's why we're called Kryll, because it's giving that edge to the small trader instead of the whale. The Kryll is the smallest in the ocean, so that's what that's the big advantage.
I like that, and I like how the name sort of ties back to that. Very cool, Sebastian. And you mentioned about being able to withdraw your funds, and that it could take a long time in a traditional hedge fund. How does that work with different cryptocurrencies? You can put them in a strategy and then sort of withdraw whenever you want, or are there some strategies where you have to put it in for a month or a quarter?
Yeah, so one of the benefits of Kryll is that we're not an exchange. What you can do is, it's a multifaceted platform, and one of the huge features is that you can actually trade on all of your major crypto exchanges through the Kryll platform. And because a lot of traders, we noticed they had a problem with, they'd have to make a quick trade, they'd have to log into FTX, they'd have to quickly log into Binance, they'd have to go through all this authentication process to, sell this asset or quickly buy this asset. And we realized, is there a way that we can safely get them to manage all their assets on all these exchanges? And we found that we could do that through our API system and by cutting off any custody. So we don't have any custody of the funds, but you can actually manage your funds through all these crypto exchanges, and your withdrawals are done separately through them, but it's all through one place, and it's kind of like a hub for your exchanges.
Very interesting. I was going to ask about being able to get your funds back from the hedge fund, but if it's in your own exchange, then I guess that would sort of be separate on it's in your account, and if you want to withdraw it to fiat, you can just do that through the exchange. Yeah,
that's right. So there's no fund management, or you don't need to put it in a fund per se or a strategy that's locked. It's on your exchange, and generally those exchanges, they let you withdraw within an hour.
Very cool. And at the beginning, you mentioned about trading strategies versus robo advisors as well. Is there different sort of functionalities that you can do within Kryll?
Yeah, so trading algorithms, generally, you can apply it to a certain pair. So we've got over 200 trading strategies that are automated on the Kryll platform. You can take these and apply them to basically any current cryptocurrency pair on your exchange and run that. So let's say that there's a particular strategy that it does well in accumulating crypto over fiat. and you want to be doing that for a particular project that you're interested in, let's say just Bitcoin, and you want to accumulate Bitcoin, but you want to avoid the huge dips. You want it to have a quantitative edge, basically. That's what you want with a trading algorithm. And so you can do that and apply the trading algorithm to Bitcoin only. Robo advisors, they're more about fund management per se. They can you choose whether you're low risk, medium risk, or high risk, and it can manage your portfolio for you or just advise you on how to manage this portfolio, and you execute the trade.
Very cool. And now I've seen different projects where you can buy, a basket of coins or an index of like a certain niche industry in cryptocurrency. Is Kryll just focused on one trading pair and there's a certain trade strategy for that, or can you buy baskets of coins and with it as well? Like, how does that work?
Yeah, absolutely. So you can do multiple things on Kryll. You can actually apply a trading algorithm to multiple pairs and allocate different amounts to each pair that's going to be traded by the trading algorithm. We also have strategy packs, which is a diverse set of strategies for a diverse set of coins. And we have a pack for DeFi, for example, DeFi projects. We have a pack for metaverse projects and so on.
Oh, very cool. And that's good to hear, because I feel like some people, there's different investment horizons for traders. Some traders want to have, they're looking at very low time frames and they're trading on 1 hour or lower. And often when I think of trading bots or trading strategies, trading is more of a lower time frame. But there's a lot of people, and often the people that win when they're not over trading. They're looking for like longer investment horizon, or just trying to accumulate Bitcoin slowly and sort of look at the long-term game. Yeah,
absolutely. Look, with day trading, it's a very difficult game. I was a full-time day trader for some time, and it took me a while to be successful. A lot of hodlers come out profitable if they don't sell, and a lot of people don't have that type of discipline. So a lot of people naturally have been coming to me, and they asked me while I was day trading, hey, can you teach me how to do this? And I really have to sit them down and say, look, do you really want to do this? Because this is difficult. In the beginning, you're most likely going to lose your money. It takes a lot. I equate it to trading at the level of an elite athlete, because there's so many things that you have to get right. And between risk management, trading psychology, and asset allocation, it can get quite intense. You'll lose a lot of sleep and probably some hair too. So, it's not an easy game. And there's these crypto rehabilitation centers for people now who are addicted to trading. So naturally, automating away and going passive on trading strategies is going to cut out a lot of that hassle for you and make things a lot easier. And it's just going to be a natural progression for a lot of people in crypto right now.
It's great to hear, Sebastian. And I agree. And I feel like a lot of these traders, they get in during the bull market when everything's going up, and it's sort of easy to make trades and make money because whatever you buy, it goes up. But when the market's going sideways or down, it's actually a lot harder for a day trader to try and actually make money and not make mistakes.
Yeah, exactly. I mean, when it's ranging, or after you get your first few wins, that's when it gets dangerous in trading, and especially day trading. And a lot of the people, I have to tell them that, look, day trading, it's not sipping pina coladas on a beach with your laptop in your hand, executing trades and making millions. It's a lot more than that. It can get stressful, and there's different circumstances in the markets that you haven't experienced yet, and they can really hit you. So, yeah.
Speaking from experience.
Yeah, that's right.
So now, what are some of the next growth plans, and strategies for growing Kryll? Is it more trading pairs, more strategies, just more assets under management?
So for Kryll, we have a lot of things to go through, actually. It's not just adding more trading strategies and getting more people to subscribe and use Kryll strategies. We're also going to be expanding into traditional finance because we've started as a crypto company, but a lot of traditional finance guys, I think, are starting to see the writing on the wall, and they're approaching us. And with regards to crypto, the integration of Web3 exchanges is going to be pretty important, I think, because not everybody wants to be trading through decentralized exchanges. So we're going to have to integrate DeFi and Web3 and those decentralized exchanges in a big way.
Yeah, I think that's going to be huge, and it'll be interesting because the custody situation is a little bit different on a centralized exchange where your coins are there and they're easily traded. But in DeFi, you'll have your funds in like a MetaMask wallet, and then that has to connect and approve to a decentralized exchange, and then the coins get swapped and they're back in your wallet. Is that going to be obviously it's necessity for Kryll to grow because DeFi I feel like is growing exponentially compared to where centralized exchanges are saturated, but still growing very quickly as well. So that will probably have some functionality differences in how you'll implement DeFi and DEXs into Kryll.
Yeah, that's right. Well, one of the things is with crypto, safety is of utmost importance for Kryll, especially with what's been happening throughout the last year in DeFi. What we want to do is give that trader peace of mind, especially when we integrate DeFi and decentralized exchanges, that even if they are connected, there's still not going to be any custody, and we can work around that.
And what's the best way for people that are just interested in like looking at these strategies and testing the waters to start getting involved with Kryll?
Yeah, so it's very easy to jump on Kryll and just test or subscribe to a strategy. We even airdrop some free KRLs to cover the fees for trading on Kryll. So it's very easy to just jump on and see a strategy that you like that matches your risk profile, your trading horizon and such, and just to subscribe and start using that strategy.
Awesome, Sebastian. And do people have to go to the website, or they can do it on their phones? And how are the different ways that they can?
We do have an app that a lot of our community use to swap their tokens on different exchanges. So they don't actually jump on the other exchanges. They go directly on Kryll and swap their tokens on there. And but for subscribing to trading strategies, you can go on our web platform and Kryll.io, Kryll with a Y. And you can log in, register, connect your exchanges to Kryll, and go ahead and start trading.
Very cool. Thank you so much, Sebastian, for taking the time and your insights into the future of trading and decentralized hedge funds. I'll leave the links for the Kryll platform and for the app as well in the description box below to make it easy for the viewers. All the best with everything Kryll moving forward, and let's follow up in the near future.
All right, that's awesome, Ashton. Thanks for having us, and you take care.